No. Are stocks about to crash? Well, if this pattern plays out, they will. It's called a failed breakout. I've been talking about it a lot, but it's very simple. Go to a higher high, fall back below, crash. Go to a lower low, rally back above, rally. Right now, we're focused on this pattern right here because we did go higher. And if we fall back below, like we did the last 3 times here, the market crash is going to be here. The reason why stocks might go down this week is because maybe the Fed shouldn't be cutting interest rates. When the market is uncertain, acting preemptively can be a big mistake. If we go back to 1999 and 1995, we see a similar pattern happening here. So why could this be scary? Isn't 1995 bullish? Well, it is. But this week specifically, we got the FOMC meeting minutes out on Wednesday, and then we got Jerome Powell coming out on Thursday with prepared remarks. If we go back to this period here, I was warning about this roughly a year ago, 2024 in September. The market is hyper-focused on the first cut being 25 or 50. I think that's the wrong way to look at it. I'm more focused on the news versus the reaction to the news. Big pause, big recession. What does that mean? Well, if we look back to here, the period going back to 1995, which is what I'm highlighting right now. Again, same thing I was worried about a year ago. You can read it right now. The prescription, the Fed is going to have to adjust the dosage. What does that mean? It means they might have to go up, down, all around. But the period right now was really curious because if we go here to the Fed funds rate, what do we note? These are all lower highs, but now we got high, higher high. Right here, it's a little bit funky because technically we have a high, lower, and then a higher high. This period right here is the only one where after a cut, we don't just go like straight down. So big pause, big recession. What does that mean? Let's look here. I think I have it. The gray area is a recession. So 6-month pause, that's the dot-com bubble bust. We go to 2008, that's a 12-month pause. That's called the Great Recession. It's pretty great because it's one of the biggest areas going back to the early 1980s. So big pause, big recession. Small pause, small recession. Well, we've paused for 12 months. So we have the tech boom of 2000s. We've got the longest pause going back to 2008, and that's a problem. But the party might continue into infinity and beyond. Why? We're having fun. It's 1997. Who cares about 2000? That's coming tomorrow. On Thursday, specifically, Jerome Powell at 8:30 a.m. is going to give prepared remarks via pre-recorded video. So what do you think he's going to talk about? It's probably the same thing he's been saying for a while, and it's the same thing everyone else is thinking at the Fed. What does he say? A little bit wary of cutting interest rates too quickly. Little bit wary. There's going to be a speech here. This is the one from Ferguson, who is another Fed member, and he basically said something similar. He said, Fed's job is to be sure that the adjustments on tariffs do not translate to persistent inflation. There's one more here. This is from Fed's Logan. Right now, the Fed is further away from the inflation side. This matters because there's going to be an FOMC meeting on October 29th, but there's no SCP. So why shouldn't the Fed be cutting rates? And why are they talking about it right now? It's because they have a blackout period. The blackout period means that going into the meeting, they're not allowed to actually discuss things as much. So remember, there's two things at play here. There's the FOMC meeting minutes. Again, I told you about this, so I don't want to beat the dead horse about why I'm bearish, why stocks could go down. It's just basically this. The market is really focused on what President Trump is doing right now. Well, what if the guy who controls the money printer decides to do something different? Who's this Bill Dudley? Well, he used to be the Reserve Bank of former president of the Fed of New York, which is the most important Fed. Okay, so maybe this guy knows what he's talking about. Maybe he does. And I want to leave you with actionable insight this week because there's not very much news. There's a couple of companies on Thursday, but what really matters here is that the rate of GDP is like really strong right now. Look at that, 3.84 for the third quarter. This is after last quarter. It was also quite strong. So down to negative. Again, below here is 0. So that's negative. That's potentially a recession. Snapback, baby. So why should we be lowering interest rates when we're having growth accelerate? We got relatively full employment, and there's potentially an inflationary shock, which is what the Fed just told you. All that translated here turns into this. Here's our key technical analysis for the week. If it doesn't make sense to you, please drop a comment. I'll do my best. But look, it's green everywhere on the daily, the weekly, the monthly. If we go to our summary notes for the week, again, Jerome Powell speaks via pre-recorded. That'll be on Thursday. The Fed meeting minutes are going to be on Wednesday. And then tentatively, we have a payroll Friday if the government actually reopens, which I'm not sure they will. The 10-year auctions will be important, and the 30-year auction will also be important. So the Fed is saying, whoa, 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 what about the economic data? And I'm saying exactly the same thing myself. As we look forward to the rest of October, there is a lot happening. But more specifically, what does this mean for us as traders as we want to try to make money this week? It's basically this pattern I've been showing you here. The failed weekly breakout. I went through that last week. I encourage you to go watch it if you want to see the details on it. Trying to keep things tight this weekend. Again, there's your key dates. I forgot the daily chart there, but you can see it's green. So green, we're on the highway. We're in cruise control until we get to 661.6, which would be a weekly lower low. Until then, we're in fully bully boomtown, buy all dips. However, going back to the third quarter of 1998, we actually got a slam and a back test. That'd be down to 613. So it is impossible for us to make meaningful progress to the downside, which is what I note here. Technically, it's impossible to make bear progress towards the 50 moving average until we actually print a lower low. Maybe you want to smash a thumbs up and subscribe to the channel if you're enjoying the content. I will be live at 8:30 a.m. Maybe you want to come hang out. I've been getting these warnings for a very long time. Maybe you will not believe it when it finally happens. Market is getting manic. Mind the risk and let your winners run, which means enjoy the party. Just make sure you know how you're going to get home tonight. Because, right, you don't have to go home, but you can't stay here. All right, there you go. Here's a couple of key charts. Here is the Russell 2000, showing us that pattern we're just talking about, the higher high and then falling back below. So the Russell did go to new all-time highs. It did have a record weekly all-time high close. However, until we close this monthly candle out, as of this exact moment, it's a failed break. We go to a higher high, and we're now currently back below it. Some of the charts are at some really key areas here, like TAN. This is a solar ETF because what did OpenAI say? We're going to spend $850 billion. And solar and batteries are going to be very important. Natural gas too, something like an EQT. But here we're focused on TAN because it's much more actionable. Right at the IPO low, right at the 200 monthly moving average. Let's see what it can do. If volume precedes price, it should go up. Also, here we got QQQ to a monthly higher high, but we're back above by like 30 cents. So if we drop 30 cents or 0.05%, we're going to be in a monthly fail breakout. Just be mindful of it because we are extended. We are having a nice time, but at a certain point, the chart will need a breather. Was that last week? Meaning 2 weeks ago? Was that it? That 1 week breather? Is that it? Is it over? We're going to find out because some other charts are giving us some warning signs here. We'll talk more about these during the week ahead. The dollar starting to break down. That's a failed cup and handle. And the 10-year note, it's still stuck. This is what I'm really trying to focus on here. This is what I think is very scary. So no, what is the Fed going to do? And then Bitcoin did new all-time high. It just did that over the weekend. Failed breakouts. We know about that. Here's the exact insight for me. So now you might be wondering, how is Justin going to take all this and actually action it into his actual portfolio? Pause if you need to. Here's my 401k account. Yes, it's small. Yes, it's real. Yes, I'm showing you the exact orders and exact trades I'm making. Here's what it says. My 401k account for this week ahead, not likely to make any major moves. I took a 2% hit on my portfolio last week from Wolf. What does that mean? I'm going to be patient and respect my plan, which means to idle and coast. Right now, I'm over 90% cash, and I can show you that. All right, sorry, 90% cash, I believe. Time, let's go here, theme weightings. So I'm 89% cash right now, and I don't care what people think. My winners are running. What does that mean? The doctor is taking his medicine. He's taking his own prescription. I'm up an average of 57% between my average holdings right now. That's incredible. Yes, I got some losers. I'm not perfect. If we look forward here to my Elgo account, here is what I'm doing for this week. So you can see here that, and again, full disclosure, this is a paper account, so we're testing our system, and I put $100,000 into the account. Here's exactly what I'm planning to do. Affirm, I'm going to double the position. STZ, I'm going to double the position. This is a trade. This is a swing. And for the swing, which means on the weekly, I'm watching Dollar Tree in UVXY. And then I'll show you exactly what those are right here because I think maybe this weekend I'm going to show you a preview of what I actually do every weekend. Dollar Tree, 5-1 risk reward. We can see it right there, 5-1. UVXY, 28-1. I like those odds. If those alerts come through, I'll consider buying them. If we look here to the monthly alert, what do we have? We have Lululemon with a risk reward of 5. and we got SARC, SOXX, and STZ for risk reward of 7.4, 79, and 2. If that doesn't make sense to you, again, encourage you to subscribe to the channel and come back on Monday. Otherwise, the goal here for me, just full disclosure in this account, is that I'm right now auditing our portfolio, which means that if you want to learn how to shadow these trades, it's actually fairly simple. We do something called a bracket order and an OCO order. So trading in real life is pretty hard. What's often easier is to, so here we go. Here's the actual order, is to learn things in a simulation, to see exactly how it works. And our goal is to eventually automate these trades, which means that we're going to be putting all this through an API. We're currently testing things out, which means we're making mistakes. But this is the exact order type we use. It's called the bracket. Pause if you need to, or come on Monday, and I will be more than happy to show you all of this. Finally, if what you saw today interests you, maybe you want to subscribe to the channel. That's the first thing. Second thing, link in the description should be the second one. We'll bring you to these notes, which is basically the summary of what I showed you today. It's all free. It's all right here, all the key notes. Or if you want to come trade with me, you can do that by going to theelgo.com or clicking on that second link in the description. Thank you again. I will see you on Monday.